association. So there are many associations nowadays. We are the only, we started in 2017, so we're 5 years old as an association. Probably one of the first, besides maybe Access is one of the earlier ones with us. We are sponsored by MAS and for Blockchain Association. We started by three founders, three founding members, Prof. David Lee, Prof. Pei, and Prof. Yo. And these are three, if you go look at it, these are three veteran founders that started this association, right? And the aim is to educate, promote best practices. And if you look at the mission, it's also not just blockchain, but scalable technologies, as in a convergence of multiple other technologies together, right? This is where we are in 2022, just a landscape of our members. And here you can see, you know, Ravi Menon from MAS says that blockchain is good, but crypto is okay, but then the tech is decentralized, the users are too centralized. He said something like this in one of the events, right? And if you look at it, yes, the users are rather centralized. I mean, in the Web3 ecosystem, I think is a closed loop of passionate people in the Web3 space. But if you look at the Blockchain Association, actually a very diverse and complete ecosystem is growing. So you see cloud providers, level 1 exchanges, you see 8% exchanges. You know, somebody actually asked me before, is the association made up of all just traders and exchanges? So we're 8% exchanges. Payments is about 11%, corporate services 11%, compliance 11%, capital market 14%, and enterprise solutions about 15%. So you can see this diverse ecosystem that is growing. And I think the association, now I've been 3 years with the association, and I think the association is growing strong with a team of very resilient people over the last 5 years, right? The membership has grown tremendously. Right now we have about 400 members. This is just a slide on all the events that we have. If you are not yet with the association, we have all the events in the association. Please continue to join us. The last slide is on joining the Blockchain Association, right? Please feel free to come to the ChainUp booth to get a QR code and to get a connect to the sign-on. Okay, so I moved from a Web2 company to ChainUp. There are 400 members in the association. It was very important to choose the right blockchain company to move to. We don't have a slide on the founder. Mr. Sailor Chong is the founder for ChainUp. It's a 5-year-old company, started in China, and then moved the HQ to Singapore 2 years back, right? So we built exchanges. We're not a crypto company, we're a blockchain company, blockchain tech company. Are we passionate about crypto? Of course we are, because these are our customers, right? Are we trading ourselves? You know, are we an exchange? We're not, right? So we build exchanges. So we have 5 offices in Hong Kong, Tokyo, Seoul, Dubai, Singapore is the HQ. We served throughout the 5 years about 1,000 customers, out of which 450 are exchanges. Globally, there are about 2,000 exchanges, so 450 exchanges is roughly about 20% market share. We cover 30 countries, and I don't think I have a slide on the countries, but you can literally tell from the 30 countries coverage that the trend of blockchain and crypto use case is global and at the same time, and growing at the same time. It's the same thing for internet. Everybody catches on to the same trend at the same time, right? And we've created a SaaS solution that operates in 30 countries, over different clients, 450 exchanges. They are not focused in 1 or 2 countries. It's over 30 countries that's using the same set of solutions. Then roughly about more than 60 million that's on our platform, end users. This is our board. So I've mentioned some of this. 450 exchange, 5 years, no security breaches. You don't see the one at the bottom. It's about, the transaction per year is about $472 billion in transaction. Our board is a very senior local Singaporean board. I am also Singaporean, but in a full-time executive running ChainUp with the founder. Okay, this slide roughly tells you the solution. We are a one-stop shop exchange provider. So, and it was for the last 5 years. Going forward, I feel that it is so important for ChainUp to really shift the expertise we have in blockchain to the Web2 space. It is very hard to find a company that has focused that much time on the tech. For the founder, it's also amazing because at one point in time whereby exchanges are making a lot of money, we didn't list a coin, we didn't operate an exchange, we focused on building the tech. It is winter now, right? So exchanges are very much impacted. We're a tech service provider. We are still impacted because we charge by trading volume. So when the trading volume goes down, then also our revenue is impacted. But we see new exchanges coming back. And the technology continuing to improve. And therefore, I think this expertise of spending 5 years on blockchain is what the Web2 industry really, really needs. But nevertheless, if you look at our exchange platform, it is a digital asset trading platform that has all the components all the services that's on top of the exchange. That includes wallet, liquidity system, all the operating tools, and then at the bottom that you don't see is a custody solution. So these components makes up the entire exchange, including how to build as well as operate it. I have one slide on each, but I'll go a little fast. So this is the exchange system, all the way from sports, derivative, ETF, ramp up, down, NFT that you have heard earlier in the panel, the entire suite of operational tools in terms of how to motivate your users, track user behaviors, etc. All the tools are on the platform. We have two models. We have a SaaS model that you can plug and play. We also have a fully private, sorry, that is at the bottom of the slide. That's a privatized deployment. So we have a privatized deployment. You can choose your own cloud or you can take our SaaS solution. This wallet, right? So, and wallet, it can be customized, it can be SaaS or ready-made, kind of take off the shelf, facilitates fiat to crypto, as well as all the token trading swap. Yeah, so I think this should be, I'll introduce a security feature on our latest wallet since this has been a hot topic discussion, right, on wallets. Custody solutions supports all the chain types. Earlier in the panel, it was also talking about operational compatibility, right? So this supports more than 200 tokens and more than, I think 100 chain types, or 200 main chain types, yeah. We are launching solutions for institutions, right? So ChainUp's strategy is to use the Web3 tech for Web2 customers. And we believe that the company that can successfully deploy Web3 tech for Web2 customers will be a winner. And high chance that winner comes from the Web3 space, of course, right? And given that ChainUp has focused on the blockchain tech for the last 5 years, we're launching a series of solutions that will help the banks, public sector, supply chain companies, etc., to adopt Web3 tech, right? So starting initially, the first part of it on digital assets, we have wallets, gateways, payment gateways, as well as custody solutions. Know your transaction, which is a compliance module, right? And then payments transfer facilities, digital assets trading, and at the bottom that you don't see is a security tokens platform. So a lot of banks, I think, for first use case will be STO will be probably a first use case. But these are solutions that's adopted from the exchange, right? And I think in ChainUp, I have seen in the association as well as in the previous job, maybe a lot of POCs on blockchain. I think in ChainUp is where I have seen scale. And it is important that, that blockchain has proper use case to prove scale, right? So, and that use case, I think, will be the best starting point for Web2 customers. Oops, sorry. the last slide on our latest security products, right? And in every crisis lies an opportunity. With the FTX collapse and all that, I think the exchanges are also proactively looking at how they can adjust and adapt before the regulations comes in, right? So MPC Wallet, which is a multi-party computational wallet that allows self-custody of your own coins, allows 3 sets of private keys, 1 set to be kept possibly by the vendor or on a different cloud. So that allows, this is the MPC Wallet, which is new. And then Chainice is a KYT solution. So if you do not know, in the Web 2 space, you do a lot of KYC. In the Web 3 space, when everything is on the blockchain, it is difficult to validate anything much because it's all wallet addresses. So KYT solution actually tries to give you a risk score on your wallet solution. And how do they do that? They connect social media data, they tag wallet addresses to high-risk nodes, and see how far you are away from the high-risk nodes in order to compute a score. So these 2 are brand new products to be launched, so just a sneak preview. So that's all about ChainUp. Thank you very much.
A round of applause once again, ladies and gentlemen, to Ms. Tan Bin Rum with the topic of Singapore, the Global Blockchain Hub. Okay, so let's next invite our next speaker, Joel Pridmore, Managing Director at Frontier Global Underwriting, with this topic for today, insurance as an enabler to the crypto industry. A round of applause once again and welcome Joel.
Hi everyone. My name's Joel Pridmore, co-founder, managing director of Frontier Global Underwriting. So essentially what we are, you can't see below, but I've got who are we. Yeah, it can be quite confusing for people how the insurance industry works. So we are a risk carrier. We underwrite risk. We're not a broker. We're not here to sell you guys anything. We're here to educate you. Give you some insights into the insurance industry's take on this sector. There's a lot of misconceptions out there, both internally within the sector, but also externally within the crypto and blockchain industry also. So just some themes here. I know that we're sort of running 5 minutes over time, so I'll try and be like a Singaporean airline pilot and make up time. So there's some common misconceptions that there is ample capacity out there. When we talk about capacity, that's capital that's there to underwrite risk. There's a lot of press reports out there about these facilities out there with the big Aon and Marsh and big broking firms, about $500 million worth of cover. Now, I'll sort of bust that a little bit. That is traditional sort of what we call vault cover. You think about bank vaults back in the day. This is cold wallet storage, for a private key written down on a piece of paper or a USB drive in a Faraday cage or whatever. This is not sort of hot wallet type crime. This is cold storage. And in fact, if there's any custodians out there in the audience, you'll know that a lot of the selling point for you originally was saying that you had insurance in place. A lot of these facilities are so good now, as you'd know, that they're actually questioning, whether that type of insurance is, is needed. Once they're now established and, saying that they have cover isn't an issue. Second point there is, I'll get to what is D&O and PI. I don't need PI, I'm the only shareholder, no one's going to sue me. That's very, very untrue. What on earth is PI and D&O? That's why we're here to sort of, say to you what your exposures are. 98% of this room is technical based, IT based, coding, developing. What we do every day, and my co-worker Simon and I, we underwrite litigation, we underwrite risk. That's what we do for a living, and we see everything. So second slide there is commercial use. How can you guys, or how can the sector, what I'm here to sort of promote is not, you individually, but the sector. How can the sector utilise insurance, to win contracts, to attract top talent? You look at all these fallouts that are in the media, FTX. I mean, I don't want to focus on FTX, but let's use FTX. I mean, we all know that's not a failure of any technology. That's a failure of governance, of human greed, of structures in place around how to manage a very large institution. There were just controls there that were lacking. So now if you're a company or a founder or a VC firm with portfolio companies, how are you going to attract good outside talent without protection for those directors and officers? And if you are the founder and you've invested all your time, your sweat, your money, your house, your car, your kids' education fund, whatever it is, what if something does happen? It's just sleep easy at night to know that you have capital there to protect your business. In the event you are sued, litigation happens, or you go bust and there's an insolvent trading claim, or there's an allegation of negligence. These are all things that we need to discuss today. And the last sort of point I want to touch on is, how can we help you? As I say, we're not here today to sell you anything at all. If there's one of you that takes something from this, that's good. We want a portfolio of clients in this space that are the best in breed, best in class. That way we can, build a portfolio and, build a reputation as having best in class and sharing knowledge and things like that. And if, the unfortunate happens and you are on the hook for big money, that we're there to protect you. I mean, at the end of the day, that's our ultimate goal. Just some common misconceptions. I like this slide. I actually live in London, but obviously Australian, if you haven't noticed. And I'm staying with my mother at the moment on, the Tweed Coast, which is south of the Gold Coast in New South Wales, but some of the best beaches on earth. And I thought, I knew that I was speaking at this conference. I was thinking, sometimes things pop into your head. These are some of the best beaches on earth, but you look, families, 2 and 3 year old kids, family holidays going into this water, swimming, golden sand, beautiful water. But there's risks everywhere, right? And I think this local council has, summed it up really well. But the thing is I sort of, there's an analogy there to this industry. Yeah, okay, everything's great. We're trying to build something here. There's a utopian view about, decentralization, community, that type of thing. But there's risks. I don't want to harp on this, but, sharks are, pointed out there, and there has been fatal shark attacks at this beach. So I just thought that, I know it's a bit off topic, but I just wanted to, give you an idea that there risks exist in life. As much as you don't want to admit it, every day that you're operating with risk. I think I've addressed that custodian topic. Yeah, I mean, the media can be a bit dangerous sometimes. You can get to a situation where you'll have read, well, there's $500 million of capacity now, I want to buy a professional indemnity policy, or I want to buy a directors and officers policy, or I want to buy some smart contract cover failure or cyber. Why can't I do it? I mean, the thing is that there's different types of insurance, and maybe that the press has picked up on things that aren't necessarily the actual, truth and topic. I think I've probably, addressed all of those points. But I think, the idealistic nature of what is trying to be built here can sometimes cloud the judgment of reality. And I think, the best businesses out there take risk management and governance very seriously. And you see that the ones that don't can end up in a lot of trouble. So I just thought I'd quickly go through, I have no sort of preconception that anyone has a clue what, I do for a living, or what our products are, or what PI and D&Os you might have heard about it bandied around in discussions you might have had with, your company or risk advisors or brokers or whatever. But essentially, directors and officers liability is protection for allegations of mismanagement of a company. So, if there's an equity raise, or, via tokens, you're obviously raising money. The risk there is that you've got, you know, PPMs out there, IMs, etc., other raising documents, and funds get lost. Funds, you know, evaporate, you know, the value of these tokens or whatever you've raised in whatever security format. That's a, you know, another topic as well, around securities and what the definition of that is. But, you know, things get lost, and when people lose money, they get angry, and there is the risk that they'll sue you for it. I mean, you know, a lot of these, you know, VC funds here will know that investors in VC funds expect probably, you know, 70% of those investments to not go well. But at the same time, if there's representations made about, you know, raising money and it doesn't go right, there's always a risk there. It'll also cover things like compliance failures with regulatory bodies. So as we all know, the hot topic at the moment is what are regulators doing in this space. I don't think that there's any one particular one that's leading the way. I mean, Asia is very progressive. I think that, you know, Hong Kong, Singapore, even Thailand, very progressive. I think, you know, Australia's getting there with the change of government, the token mapping exercise, trying to really understand what the environment looks like. And then everyone probably looks at the, you know, the SEC and what they're doing there, and, you know, that's always a bit of a who blinks first. But, you know, if there are, you know, issues from a regulator's perspective, and they will take issue, there is shining light on this industry everywhere. You know, you have exposure as well. As I say, insolvency claims, you know, business is business, and there is risk of insolvency, especially in startup phases, and class actions. I mean, that's something pretty typical to Australia and the US, less so in Asia, I know. But, you know, those issues are there. I mean, you know, we're seeing a lot of litigation funding firms actually set up now. You know, they see big business in this space to go after, you know, the bad actors or failures. So they're basically attracting money from third-party investors to fund litigation and take a share of that litigation. And there are specific crypto litigation funding firms out there. Professional indemnity, so what's that? That is a distinct difference to D&O. They're two different coverages. So what professional indemnity does is it covers you for allegations of non-performance or breach of professional duties. So if you're a developer, a consultant, an engineer, or even a protocol, you owe duties to third parties through contracts. The VCs were talking about terms and conditions before. All this stuff exists, you know, just because, you know, it is decentralized finance or there's a community aspect to it, there's still contracts in place. And if you don't deliver on those professional services, then you have exposure to third parties that you owe those duties to. I think this is really the exciting one for us. I mean, we talk about, oh, well, you know, scare you, you know, this can happen. It can happen, and it does happen. But I think the really exciting stuff is where, you know, we can be of use to clients for, you know, things like winning contracts. You know, if you're a developer, an engineer, a protocol, you know, working with, say, a large bank trying to, you know, work out a stable coin or something like that, or, you know, a mining operation. You know, all these are sophisticated businesses, and they're not going to engage you, you know, unless you hold certain limits of professional indemnity cover. That's just the way it is, particularly in certain jurisdictions. So, you know, PI insurance can be key to you winning contracts if you're a professional services provider. Regulators as well around the world. So if you're dealing with retail clients from a financial product perspective, you know, regulators will require you to hold certain amounts of insurance. Without that insurance, you can't trade. You do not have a license. And, you know, from that perspective, you know, PI insurance is absolutely critical. You know, the next point there I touched upon with attracting top talent. The thing with any industry is that, you know, good governance and governance theory will say, well, we should have different experts from different fields coming together as a board to be able to govern and hold the management accountable. That's corporate governance theory, right? But where are you going to get these external talent if they know that there's a huge spotlight on a sector that they're about to engage in, and, you know, their personal assets and life is at risk? without having adequate directors and officers insurance to protect them for allegations of mismanagement, because the board, are the ones that are targeted when there are, issues with companies. You're not going to be able to attract top talent. So D&O insurance in that regard is really important. And as I say, the sleep easy there at the end. I know what it's like. We started this company 4.5 years ago. I came out of a big corporate called Munich Re, which is the largest reinsurance company in the world. On the direct insurance side, which was via their Lloyd's syndicate. So I lived in Singapore here for 18 months. I had, a relatively easy life, and then I decided to, start my own company. I know the stresses that entails, the sleepless nights, the tolls on relationships. So I understand all that, right? And, if you're going to put all that into this and something goes wrong, you're going to want someone there to protect you, The insurance carrier like us with our capital, but also access to, top quality lawyers, top quality advisors to be able to, protect your interests if allegations of mismanagement or anything else were to occur. That famous line, these chairs are sort of causing issues, I know, with this screen, but this famous line from Warren Buffett is, it takes 20 years to build a reputation, and 5 minutes to ruin it. And that's so true, right? We all toil our whole careers, we try and build things. If something were to go wrong through no fault of your own, and that's the thing with litigation, is it's not always that you're in the wrong. It's just, people might take offense and engage lawyers and want to bring your brand down or litigate you out of business. That's the other problem with being a small firm, is that, there's endless pockets of large corporations that might take offense to you cutting their grass, so to speak. That's another area that insurance can really help. So, they're really the commercial uses that we want to, help the sector with. And just finally, I think this is my second last slide, going okay for time. The gates of insurability, these VC firm founders and heads talked about, their due diligence and what they do on potential portfolio companies. I mean, in many ways, we're the same. Where we have gates, we have, criteria about, who we'll look at, what type of activities we'll look at. And I think the benefit that a business can have from that is you're having, us look at things from a different perspective, knowing, sometimes insurance people can think pessimistically about things because, we don't really gain on upside other than our clients being okay. We only sort of see the downside always. But we see things, we know trends, we know what's happening around the world. We know what lawyers are doing, for example, with these litigation funding firms. We know, exposures that you need to think about as founders and management, and we can help you, stress test your current controls. As I said there, we have access to all these third-party specialists, not just at the time of claim, but, things around contract reviews, cyber security reviews. That's an aside, probably I think there was a topic on cyber security, but, that's a massive spotlight around a reputational perspective. And even the quality of the service providers that you guys are using. We see what works, we see what doesn't work, and we know why it doesn't work, and we're able to help you with that. So, that's another goal of ours. And just the trends down the bottom. So, we're able to, I guess express what we're seeing around the world. I mean, our book is a global book. We write everywhere from Australia to sort of Kazakhstan. We don't just write the crypto industry. We write crime for banks around the world. We write professional indemnity for fund managers. That's one of our core portfolios. We write directors and officers insurance for listed companies in Australia with that class action exposure. We write contractors, engineers, architects, design and construct. We write a very large portfolio, and we see risks from everywhere. And I think risk is very translatable across sectors. It's how you contract, how you manage, how you govern, and the people involved really, and the clients you deal with too. So we're able to assist with all that as well. We're actually, this is not charging fees here. This is just part of what we do in terms of the insurance discussion. So, I've got my colleague Simon here. He runs our Australian operation. We've got an AFSL in Australia. We're locally licensed with a fully owned subsidiary servicing the Australian and New Zealand markets locally. We look after Asia from London, where I'm based. And I think from our perspective, for all of you or anyone out there, if you have any questions, feel free to come and see Simon and I. We really want to just help this sector. We're not here to sort of say we want to write everything here. We just want to, help best of breed promote the sector and the integrity of it. So, thank you for everyone's time. I know that, insurance is sometimes not the most interesting topic on a run sheet, particularly on a conference like this, but I hope that gives you an idea that, we treat things differently to probably your conception of what insurance is. And, we appreciate your time and are really, proud and happy to have a seat at the table at something like this. So thank you very much, everyone, and hope you have a good conference. Cheers. Thank you.
Round of applause once again, ladies and gentlemen, to our speaker, Mr. Joel Britmom. Okay, as we move on down to our next panel discussion with the topic, will DEX replace CEX? So let's welcome once again our moderator, Mr. Karim Rafa, on stage. And our panelists, Yuzin Chua, CTO and co-founder at Cake DeFi. Shodipo Ayomide, developer advocacy at Polygon Technology. Cesar Moreta, CTO at XLD Finance. Chin En Lui, Saison Capital Principal. And last, Xavier Ling, Head of Strategy at Coins.ph. Round of applause once again, ladies and gentlemen.
Looks like we're missing one panelist here. That doesn't look like you, man. All right, well, I guess we can start without him. See if he joins. He can always jump in, right? Yeah, it's all right. Things happen. So welcome to the panel, CEX versus DEX. Great to be on the panel with you guys, as per usual. We got this great intro, but as I usually do, can we get a bit of an intro again, and also what you're working on right now, like in 2 sentences?
Thank you, Karim. Yeah, my name is Yuzin Chua. I'm the CTO and co-founder of Cake DeFi. At Cake DeFi, what we do is we basically take what the complicated part of DeFi and simplify it to make it really user-friendly. So we actually encompass both worlds, DEX, which is the DeFi part, and then make it to a centralized part and make it easy to use, so CEX part. So this part is going to be really relevant to us. We're not an exchange, but the paradigm is actually very, very similar.
Hi, my name is Cesar Morata. I'm a CTO for XLD. XLD Finance is a Web3, ecosystem. We're building products that, in terms of being able to use tokens in the real world. So we have products that we're trying to build to make that, I think in terms of mass adoption, to have that familiarity with in terms of adopting tokens in the real world.
Hey everyone, I am Tsingan from Saison Capital. We are early stage Web2 and Web3 VC. And I think it will be interesting conversation today because VCs are traditionally known to be control freaks. So let's have a good conversation around that.
Hi everyone, I'm Xavier. So I'm the strategy lead at Coins.ph. So we run both an e-wallet as well as an order book exchange. So of course, many touching points in this panel.
And finally, for me, my name is Karim Rafa, and I'm one of the leads on the blockchain and crypto advisory at KPMG.